Good morning, Friday morning. I'm gonna do a little bit different video today. This is a presentation. This is sort of my final presentation for at the conclusion of my April simulated trading experience. This is for someone to better help wrap their hands around what I do, what I'm trying to do. Just further explanation. This video will go on my video log on my website along with everything else. All materials um, will be there for someone to review. So not only will do I have proven track records, but someone who wants to, let's say, really put some character, deeper understanding of what I do is there. So getting started. I have to put this. Past performance is not indicative of future results. Private accredited investors only. Who knows these days I have to say those sorts of things, but that's the legal jargon. Uh, so look, I've been a trader my whole life, but at times I've uh, gotten stressed out by it, and I've also had a career in finance as a CFO and a controller for small businesses. But it's been a journey, and I'll talk a little bit more about that. But I'm 48, and this is the last decade of working for me or less. It'll probably only be working for a year or a couple of years more um, before I retire. But I'm just gonna give some character to what I do, some example tools and strategies that I do, and just talk a little bit about my background and some other intangibles, and then to show a display of my track record. For example, this is a chart here with a bunch of indicators on it. Indicators are what they are. I've been using this stuff for so long, I don't know that I need it, but it's sometimes I use them, sometimes I don't. But just to give an example, you can see these little crosses here. These show when there's a an inside day, meaning it's a narrowing of range, which often indicates a day before a breakout. Whereas these blue and red dots indicate it opened either above the prior day and closed below, or opened below the prior day and closed above, which means there's a fair amount of momentum and trading activity. Sometimes it's an opportunity for continuation, and sometimes it's a reversal. It just depends on the situation, depends on the trend and the size of the move. But that's what those blue dots are. This blue moving average, this is a 5-day moving average, and this indicator down here is actually related because this indicator shows if there's been 5 days in a row where it closes above or closes below that 5 period simple moving average. You can also count those days um, by, actually count them one by one, but this is sort of what this indication is. This is an indicator of volatility that seems to rotate, and this is a 2-period rate of change that helps in swing trading. Just shows the back and forth rhythm of this market, and also shows based on the peak, the size of the peak or valley, the amount of momentum involved. Um, so this it's hard to see, but you see this little text. This is and you see these blue and the red. This is a program that I actually sorry, this is a trading strategy that I programmed to be automated. Essentially, it's very simple. You buy after it's gone below the red and it closes above it, and you sell when it's above the blue and closes below it. So, for example, this you can see this blue line here. So this is a winning trade, buy here, sell here. You can see the sell here, and it covered here, so it lost money on that one, lost money on this one. Shorted here, made money on this one, went long, made money on this one. Shorted here, made money on that one. So it's winners and losers, but the winners are bigger than the losers. But that's just an example. I don't trade anything automated, but all these things I've used to train myself. Here's a momentum breakout strategy, and you see a lot of these, so it's hard to really dig in. But this is trying to catch these bigger moves where there's a large momentum move, so it catches a lot of these, and then sometimes it gets stopped out. But you see the size of some of these winners are pretty big, and when we take a loss, it's pretty small. Um, but that's another one that has taught me a lot just by programming it and spending so much time optimizing it. You learn a lot about how the markets work. This is just an example of the momentum entry. You don't need to know what this means, but I just am showing that I program this stuff. You know, this is just if the market position is there, meaning you don't have a position on, buy the next bar at the close plus some, and this is a measure of um, average true range. It's just a measure of a statistical measure of if it moves a certain amount, you go with it. You go with that momentum, and this order always sits in the market 24 hours a day, waiting for that. And then this is an example of a getting out position. You can see that this is very simple. It's just literally buying a momentum plus. And this is a very sophisticated market that first keeps a really tight stop, and then as the market moves in your favor, it loosens that. It starts to once you're guaranteed a profit, then it goes with a very loose stop, and then it tightens up that stop, and then after a certain amount of time, it just gets out. Um, it's a complex strategy that tightens the stop over time, but it proved to be very successful. It's just showing you. I coded all this. I learned how to write this code. Um, I've never automated traded stuff. I did set up a remote server that ran this program 24 hours a day. Um, but I can be much more successful discretionary trading. But it taught me a lot again how markets work. So I've developed all these skills through learning how the markets work and strategies where the edges are statistically. Um, but there's all sorts of other things you have to do as a trader. Um, so one of the strategies that I've done involves a very short amount of time trading, but this first trends for the day here. You know, this is based on work-life balance. This is sort of like this is the life of a person that does these trends for the day. You do your homework 1 to 2 hours at night, and then you may trade for 1 to 3 hours when the volume's really high in the morning, and that be done. And this strategy I did while I was working for almost the whole year of 2017. I'll show you my track record. But this was my life, trading before work every day. I lived in California, so I had time to trade early in the morning while the markets were already open in the East Coast in a different time zone. This is another strategy of trading, the swing trader. And this is the life where you're almost always having to watch the markets and always having positions on. So it's a lot of long-term stress, but it's less high stress in the moment. You're just sort of waiting for markets to close at the high part of ranges and putting positions on and sort of always following. So this actually um, is in terms of how much I watch the markets, it's indicative of that. It's less stressful and it's pretty consistent. And this type of strategy tends to make the most amount of money. But actually, during my trading simulation, I did both trends for the day and the swing trader sort of stuff, and you'll see that if you follow through the video log. Um, these breakouts and failed breakouts are very rare, but there are trades that are like, and again, it takes discretion because you can't just program it. But when a market's been going in one direction for a long time, and this is particular in the stock market, but others it works as well, commodity markets. Um, and then there's so many people on board, and it's just run out of gas over a long period of time, and then there's a high momentum movement against it. It's sort of a 95% trade, and it's a trade that maybe happens, 20 of these trades a year in different markets, but they're just such high probability trades when you trade them right. And then the last is long-term trend following, which is great. I sort of did this. This is how I started trading at the beginning because this is what I learned from the books I read. And I made a lot of money, but I just didn't have the patience for it later on. So I stopped doing it. Long-term wealth, it's probably the best just for a person, for a human being, for their life. So they're not glued to the screens, high stress all the time, but it's not the most profitable. Um, in a short amount of time, you can make more money if you were to do this for 5 years, or if you traded every day for 5 years, it wouldn't be as profitable. But it's how most of the billionaires have made money, and there's something to be said for that, and that includes futures traders, commodity traders, stock traders, and so on. Um, Tricks of the trade. So just to give you an example, why you can't. It's so difficult to program automated trading systems. But there's 7-day cycles where, you know, first of all, people have to meet margin requirements. Your average individual investor has to do that every single day. So there's a certain new money that comes in the market every day, and when a market moves in a certain direction, it almost always closes at the highs or closes at the lows. So knowing that cycle helps you to, when there's a good day and your uh, discretion tells you that it's a good high to low day or low to high day, it's best to hold to the end of the day. The same thing happens, those sort of cycles happen on a weekly basis, on 2 weeks. There's a cycle and there's a monthly cycle. Also to know that markets tend to trade alternating trading ranges and trending patterns. Quite commonly, those sort of alternate 2 days at a time, sometimes one day, sometimes three, sometimes within a day. You see those sort of alternating trading ranges throughout all different time frames. That's not something you can program necessarily easily. High volume begins and ends a trend, but sometimes it's the middle of a trend. You know, uh, you know that people trade on very little margin, so you know that again, markets once they get moving and people have to meet margin requirements, how that affects markets, and you sort of can know there's certain markets that small traders trade that you find little edges by knowing that sort of information. Markets correlate. Money, huge amounts of capital are always chasing performance, and sometimes shorts and longs go out in opposite directions, and sometimes certain markets move together and don't. When there's large liquidating events in the markets, it doesn't matter. Like, if the stock market's been going up and the economy is going to get bad, so it's going to go down, and gold and bonds are going to go up. It doesn't matter. There'll still need to be a time where gold gets liquidated because um, people or always indefinitely and permanently long and don't tend to take short positions for long periods of time. Knowing about how Traders Act, Weekly Traders Act, the economy is doing, large banks, hedge funds, and all these types of things tend to play into it. Things like knowing there's three trading sessions: Asia, Europe, and the Americas. Knowing that even after a market closes, if it's in a new breakout, it'll tend to follow through in the next session. So, like if it's strong in America, it'll follow into Asia. Likewise, Asia to Europe or Europe to America. But it usually runs out of gas after 12 years or after 2 sessions follow through. And so little edges like this that just aren't programmable, but you just learn through experience. Learn what sets up breakouts and failed breakouts, which is probably the most powerful pattern is these failed breakouts. Where everyone's anticipating a breakout, it moves through and then it reverses course and goes all the way back through the range. So big profit opportunities and sort of knowing the psychology of the market and the psychology of the traders and what sets those things up. Those are all things you can learn from experience and you can't really automate. And if you tried to automate all these things, you wouldn't end up with any trades. Just you'd never get a you'd never get a trade on because all these requirements would never meet. But you just sort of have to know these things. So sort of how I train myself is using statistics, using these programming these automated trading systems. I learned trades that have an edge. Then I determined, okay, what kind of life do I want, lifestyle, and I changed that. Sometimes I want to trade during the morning. Sometimes I know that we're going into a low volume environment, and so I'm taking a little bit longer term trades, whether it's for a day or 2 days. But learning from experience, drilling that trading strategy, doing it over and over again, practicing it until it just becomes second nature. I'm doing it without emotion and just automatically. Letting these program systems teach you the types of trades to look for, and understanding that it's not the markets, it's not about making predictions. There's no such thing as predictions. There truly isn't. Um, it's just understanding you need to follow the trends while they're going and get out when they run out of gas or they turn and that's it. But to make predictions for the next day, I mean, news events can come out in 5 minutes after you put a position on and burn you because people are unpredictable. So you have to retrain your thinking in all of life and business. We say, okay, I'm going to make this decision and then I'm going to work for that decision to work out and I'm going to hope it works out. And you just can't think that way. You have to take it, you have to change the way you think and your mindset. You have to think of it as a coin flip business. Take small positions to prevent any anxiety and manage the risk properly and mostly mastering your exits and not worrying so much about the entries. Use physical edges to get into the entries. But it's almost more important to, while you're in the position, to not get carried away or get too excited when the market moves in a direction, but rather knowing yourself and if markets are moving against you or with you, knowing when to get out. It's just those sorts of things. Um, Understanding, the sensations you get in your body. We have gambler's instincts and impatience, and doing your homework so that you have a plan every day. It's not hard once you learn all this. Once you got the experience and the skills and you taught yourself. But once you do that, it just requires you to always continue to think clearly. One example is chess. A lot of people that blitz chess. I mean, very short games, 1 minute long, 3 minutes long, 5 minutes long. They're not having time to carefully think about what they're doing. They're just looking for this sort of emotional rush and this sort of dopamine fix that you get when you win, and it becomes addictive. And then, over the long term, I mean, when to become a grandmaster and why it's so difficult and it requires maybe 10 years of study and hard work to just become a grandmaster is because you start to encounter so many complexities to the game and realizing that it's not just about, oh, I just need to think of the best move. You need opening theory and how that translates into the middle game. You need to understand different types of players and different types of playing styles for different types of openings, and it becomes so complicated that only a human being can really do it well. And there's some similarities to that with trading. There's so few good books out there, so many trading books, but trading books are written by people who probably weren't successful at trading. There's a few exceptions. Toby Crable, you may not have heard of him, and he wrote a book many, many years ago where he went through statistical edges. And Linda Bradford Raschke's my hero. I've learned a lot from her. She's been kind enough to share many things with the public and YouTube videos and things. Uh, and I've traded in her trading room with her before, where I've learned quite a few things. But so a lot of my thinking comes from her and from her as a mentor. Um, but ultimately, in the end, everything is discretionary. Even trading systems are discretionary because you may stick with them, you may not, knowing when to put them on or not. But trading experience, and life experience, developing maturity, emotional calmness, and awareness were very important for me to develop my skills. So this is sort of finance 101. You sort of learn these things in finance school, but you would only have to make a 0.5% per day for 5 years to make $25 million if you started with $100,000. And if you make 1% a year for 5 years, you'll make 25 billion. So, in other words, when you're consistently making money and compounding that, so you increase your position size as the amount of money you have increases. It's really astronomical. So you could see here, you start with $100,000 in this graphic here. You make 1% a day. There's 250 trading days a year, so there's 1,250 trading days in a 5-year period. If you make 1% a day, and of course you're increasing your size as that's what compounding is. After 5 years, you'll end up with $25 billion. So, I don't think many people are doing that or sticking with that, and I don't think the markets can tolerate that sort of size, liquidity. You become too big of a whale on the market. But it's just an example, um, and here's the example here of um, just just making. So in this example, you make, you know, this 1% a day is yearly a lot. But even if you just were to start with 100,000, you make 200% a year every year for 5 years, you'll end up with 24 million at the end of 5 years. This is, I haven't done this uh, in the long term. But if I kept doing what I'm doing to end up with 10 or $20 million shouldn't be difficult. But in my life, that just hasn't been my life journey. My life journey, a lot of it has been spiritual in nature, and a lot of it's been trading, saving money, and then doing a lot of travel. So I haven't had the discipline to remain consistent at it. But I'm 48, and now is the time for me to do that. Um, you know, 2001, that was right at the end of college. I started trading. Between 2001 and 2006, I traded, but I was still working. I got my MBA degree, and I made a lot of mental and emotional errors, and nothing really major report. Made money, lost money. But once I graduated MBA school and um, did a lot of research, I did become successful doing some long-term trend following between 2007 and 2011. And although that went well, I just didn't stick with it, and I didn't have the patience, and so I worked on short-term trading and didn't have much success with that for many, many years. But one year I traded the whole year, early in the morning before work, 2017, and I'll show you the track record. But I have done it, I can do it, and I've demonstrated that. Um, the April trading simulation is it's a repeat of 2017, but it just shows that I've developed a lot of skills and talents and emotional development since then. Um, but just to sort of give you an idea of what I've been doing for the past 12 years, I've done 5 10-day silent meditation retreats. I've had 7 trips to India, 10 trips to Thailand. I've stayed in ashrams in India and monasteries in Thailand and New Zealand. I did ayahuasca in Peru, which is sort of a shaman drink for spiritual development. I did yahe in Colombia. I made DMT and smoked it about 30 times, which is not an easy, it's not, these aren't pleasurable things. These are difficult, challenging spiritual things um, that can be a little bit painful and teach you a lot about yourself. But I maintained a regular meditation practice and listened to tapes daily for 10 years. I left my church that I was raised in and the brainwashing that I was raised in back in about 2014. And that's sort of when I began my spiritual journey. So it's sort of like I had that phase for the past 10 to 12 years. And I've completed that phase of my life. That's just how I look at it. And it's time to use those um, experiences of spiritual growth to and emotional development to be successful in trading. And that's sort of the point of this slide. Here's 2017. I started with about $20,000, but in March, I think I added another 10,000. So really the initial investment, I'd say, is about $30,000. And over the course of a year, trading in the morning before work, I made 30,000 in profit, which in 1 year was about 107%. And this is the statistics here. So actually, my trades, I was only uh, making profitable trades about 40% of the time, so less than 50% of the time. But part of trading is, when you have a winner, you let it run and you cut losses short. And so I was doing that, and that's why this is profitable, is that my winners were double the profits of when I lost money. So I was averaging $750 a trade overall, but because the winners are greater than the losers, this is pretty typical. You might uh, not have more winners than losers, but um, that's okay as long as net you're making money. And these are the numbers. You know, you say the profitable trades, I made 100,000. Of losing trades, I lost 74,000. But this is sort of doesn't involve commissions and some other um, things that happen and money added and money withdrawn and so on. But that's sort of approximately what the numbers are. And some trades come into the year. So the math is a little bit complicated, but this is basically what happened over the course of a year. Um, so in April, I did simulated trading, and of course, as soon as people hear that, they think, "Oh, you're going to cheat, or you're going to trick it, or something." There's nothing different between what I did, which I'm going to show you what I did, between real trading and simulated trading, except for the very simple emotional factor. And so there's just a quote here about a man going to fight a duel who was asked if he's a good shot. He says, "Yeah, I'm a great shot." He says, "Well, are you a good shot when there's someone pointing a gun at your chest?" In other words, the point is, yes, there is a difference in simulated trading and not. But I mean, I'm an old pro, and that's the point. Is through my spirituality and through just lots of experience and making millions and losing millions, and you just you eventually just you lose those gambling instincts, and um, it becomes pointless after a while why you would even bother entertaining doing stupid things and taking too much risk. You've just been through so many experiences, you just don't do it anymore. And that's sort of where I'm at. Here's the April 2025 trading results. And I went so far as not only did I document the trades before I made them and closing the positions afterwards, but explanations of my thinking process and at times actually even showing while I'm making the trades. So there's no question, not only can you see what I'm doing, why I'm doing it, but there's documented timestamps of when I'm doing it. And what's interesting here is, to me, so my P&L ratio, instead of winning 40% of the trades being winners, it went up to 60% of the trades being winners. So, maybe I contributed that to I mean, obviously my experience, but better tools and systems that I use. But what's interesting to me is the average profit and the average loss. The average profit is double what the average loss was. It's identical to what it used to be. So I suspect it partially is that the nature and character of the markets are that way, but I suspect also there's some awareness and mental characteristics of myself of why, how long it takes before I cut a loser and how long do I give a profit a chance to run. So, but it's pretty fascinating to me that the size of the profit to loss ratio has always remained the same, but I've improved on my ratio of winners to losers. So I think that's something I can think about for myself. But this is pretty wildly profitable, and I made about 40% in 1 month, so it's pretty significant money. And if I continued to do that for a year, I'd be the best trader that ever lived. But I don't have the consistency of doing that well for a long period of time. I didn't have the wherewithal to stay with it. Whether I got stressed out or I got attracted by travel or other things I did with my life. Um, but this is my life journey, and I'm 48, and now it's time to make this money, make a lot of money in a year or two, be consistent, and retire. That's sort of that. I will make this presentation and this video available on my website